Hello traders, Today we are recording this video because a TSTW trader has asked a question relating to the wave counts. And we have here the monthly charts, and we're going to start looking at these charts because the challenge for that trader is that she said to me that she get a bit confused, okay, after this black vertical line here, all right? So the wave count that she did was good because you can see here she said we have a consolidation here in this session here. And then she labeled this one a first wave, second wave, all right, third wave, fourth wave, and a fifth wave. As you can see, this is an impulse wave because we don't have any violation of the Elliott wave principle, all right? It's all okay, good, because the fourth wave did not overlap the first wave, and also the third wave is not the shortest wave. So from here, where my cursor is, up to this point here, is correct. Okay, five wave. It's an impulse wave, all right? Okay, I will get back to that in a minute, okay, so you can understand. So a wave count on one time frame, all right, we need to understand that, very important, because of the fractal patterns, the fractal nature of the wave count. A wave count on one time frame, all right, is a mini wave count in comparison to the bigger cycle. So anytime you count 1, 2, 3, 4, 5 on any time frame, just remember that wave count on that time frame is only a mini cycle in comparison to a higher degree. Okay, so you don't get confused. So though we see 1, 2, 3, 4, 5 on the monthly chart, that 1, 2, 3, 4, 5, we can just label it one wave in a higher degree. All right. So what is happening? Why the confusion? This is truly happening. People, you are wondering what kind of pattern is this one, which is normal. Now here you can understand what you need to do is to go into the mind of traders that are trading this stock, right? And so they count 1, 2, 3, 4, 5. So they say, all right, the trending phase has ended, all right? So they are quite aggressive. They came out very fast. You can see, that's why the candles, you can see how they came out very fast. Boom, 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 down. So no one wants to hang around. So after you see this candle here, this bearish candle, and this one here, those two candlestick bar are forming a bearish candlestick pattern. Now, you can understand what is happening, all right? So Elliott wave traders counted 1, 2, 3, 4, 5 waves, all right? They say end of the trending phase, they start coming out. So after this month, this candlestick bar is formed. Now, another group of traders that are candlestick pattern traders say, whoa, this is a bearish candlestick pattern. Though they don't know anything about 1, 2, 3, 4, 5 wave, they know that this is an invitation to sell. So you can see this, the following candle, there is this shadow here, try to go a little bit up. They rally up near the median line of that red candlestick bar here. And those candlestick pattern traders joined the Elliott wave trader, and they also sold it. Now, pushing the price down all the way here. Now, I need to mention, so feel free to disagree with my comment here, which is normal, because when it comes to Elliott wave trader, say, Joe, you are wrong, blah, 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 blah. I agree, okay? Keep it to yourself for now. But I'm speaking to the general public, okay? Not to the trader that asked me the question. All right. So, in my view, this move down went too far. All right, it went too far. Normally, it should stop here. Okay, to stop somewhere here, but it went too far. But why it went too far? It went too far because other market participants saw what's going on. The Elliott wave trader want to come out. The candlestick pattern traders saw the beautiful bearish engulfment here, and they want to sell, and all of them sold it down, and it went down too far. That's my view, all right? It went too far. But there is another group of traders that also are in the market. That's why we are saying to you, you need to go into the mind of other traders. There are Fibonacci traders. So what usually takes place, Yini, because Yini was the trader that asked the question. Now, when we see 1, 2, 3, 4, 5 moves up, in a normal Elliott wave cycle. All right, so we have 1, 2, 3, 4, 5, and then we have a zigzag pattern 1, 2, 3, bringing the price to V zone, the 50% and the 61.8% Fibonacci retracement level of the trending phase. So what I would suggest is that on your chart, because I'm using your email because I don't have a data for this talk. That's why I'm using your email to do this video. What you need to do is to apply the Fibonacci retracement to the trending phase from here all the way up here. And I believe where the price did stop should be in a sweet spot zone between the 50% and the 61.8% Fibonacci retracement level. Let me know whether this is correct or not. But if you look at the chart, it looks like it's near that zone, 50% and the 61.8% level. So now the professional traders, as the price start going down, they know the drill, they know the story. This is what we are talking about, the story about the Elliott wave, the normal Elliott wave cycle. 1, 2, 3, 4, 5, 1, 2, 3, down to the 50% and 61.8% Fibonacci retracement level. Normally, this move should not go all the way here, but they push it down to that zone. Okay, so that's why this move down went a little bit too far. But in the mind of traders that are trading this stock, you see, they can 1, 2, 3, 4, 5, 1, 2, 3. All right, so they say, all right, this is end of one Elliott wave cycle. Where my cursor is, in their view, the correction has finished. Now, you will notice that in many of my videos, I always say to traders that the Elliott wave count is one step at a time. Now, the reason why I say this 100 times is because it's so important, one step at a time. Now, what usually takes place, a lot of Elliott wave traders try to go ahead of the price. Don't do that. You can be very experienced Elliott wave trader, don't go ahead of the price, all right? So once we see 1, 2, 3, 4, 5, and then a correction to the 61.8% Fibonacci retracement zone, people are assuming that a new cycle will begin. All right? They begin that a new bullish cycle will start. All right? That's why you put a black line, which is good. So from here, where my cursor is, all the way up here, down to here, is at that point in time, talking about the wave count is one step at a time. At that point in time, people say one Elliott wave cycle is completed. They were not wrong to say that. But now the price start moving up, so people were expecting a new cycle to begin here. So you see how it went up very far? Push, 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 up here. But if you apply, look carefully. So what we say to traders is that this is another thing that we told traders, all right? If the price breaks above the previous high, which is the high of the fifth wave, you see here it breaks above the high of the fifth wave, the next challenge for the bullish progression is what? The 138.2% Fibonacci extension level of the prior trend. But normally, when we count the Elliott wave like this, 1, 2, 3, 4, 5, all right? And we see a correction, price start going up above the high of the fifth wave, we apply the Fibonacci extension to the fifth wave. So, what I would suggest, you apply the Fibonacci extension to the fifth wave. This is the fifth wave here. Apply Fibonacci extension to it. And you will notice that this move is stopping near the 138.2% Fibonacci extension level. All right? Stopping there, 138.2% Fibonacci extension level. So my apology to trader because I'm using her email because I don't have a chatting software for this particular stock. I'm using her email to record this video, so I can't draw anything on this chart. All right. So this move up, this section here, all right, is ending near the 138.2% Fibonacci extension level because the bullish momentum is not very strong. Otherwise, it will break above that 138.2% critical resistance level. It didn't. So it's very interesting, this chart, I have to say. Very, very interesting. And it stopped at 138.2% Fibonacci extension level, that zone. So in the zone, all right? But now they bring it back. Look at this move now. So price failed, okay? Price goes above the previous high, but failed to go above the 138.2% Fibonacci extension level. This is an invitation to sell. You can see the candlestick bar here forming, we have a consolidation to acknowledge that zone, and then they bring it back down. But look at this move down. I want you to pay attention to this section here. Look what the price did here. It did this time, it did not go down very much. It didn't go as far as this one. So as I was telling you at the beginning, that this section here, now because of the candlestick pattern traders and also Fibonacci traders, they push it all the way to the 61.8% Fibonacci extension level. Normally, I think they went a little bit too far, but it's okay, all right? But this second move down, you can see that it stopped almost there, all right? This, you see, it stopped almost there. So we have anotherly pullback now, which is stopping exactly where we were. We wish we should have stopped at the first time. So here, this one, you see here, they stopped almost there. You see the line here. Am I making sense? All right. So here it is, a pullback, because this bullish move that people were expecting to be an impulsive wave has failed to exceed the 138.2% Fibonacci extension level of the fifth wave. So now they bring it back down to the normal place. Okay? Well, as they bring it to the normal place, they try to form a higher low. So a higher low in comparison to this low. It's an invitation to buy. We have a higher high followed by a higher low. So this is an invitation to buy after this long candlestick bar. So in fact, this is a good one. You see, this is a very high volatility. This is why we say today, high volatility followed by low volatility, possibility that we have a reversal. High volatility followed by a low volatility, possibility that we have a reversal. Doesn't mean guarantee that we have a reversal, but possibility that we see a reversal. We will see a reversal when we have to apply a multiple temporal trading method to trade it. So after this long candlestick bar and this smaller one, this is high volatility followed by low volatility on the monthly chart. We have a double. In fact, you see this low. You may say inverted head and shoulder. This is the head. You can say inverted head and shoulder, but it's at the wrong place. Here it is, you see. Equal low here. We apply top-down trading method, and people start buying again. And the price went up again. And if you agree with me, though you see it went a little bit above this high here, a little bit above it, it quickly crashed back below it. So it went a little bit above it, formed the same pattern as it did here. You see those candles here, those three candles here. 1, 2, 3. Same thing here. 1, 2, 3. Between a green and a red. A green and a red. It's coming down. Boom. Same thing. Green, 1, 2, 3. Red, boom, down. Green, 1, 2, 3. Down. You see? Same pattern. All right? Same pattern. This is a fractal pattern, in fact. Similar pattern. So it went a little bit above that one. So in the same zone of 138.2% Fibonacci extension level, a little bit above it, and then it quickly come down. Now you have to understand that the traders that are buying this stock believe in the company, as you mentioned in your email, that this company is giving a lot of dividends. So the trader was telling me that all these bell on the chart represent the time when the companies was distributing nice dividend. So a lot of market participants believe in this company. So you can see how they push it again, try to let it go further up. Okay? All right? So that's why we have this move up. So in fact, all right, we counted 1, 2, 3, 4, 5 waves. Good. And then price coming down. Normally should stop somewhere here. But they push it all the way to 61.8% Fibonacci extension, Fibonacci retracement level. So at that point in time, people say, oh, all right, an Elliott wave cycle is completed. So they say they believe that a new cycle will begin. As the new cycle is underway, it failed to go above the 138.2% Fibonacci extension level of the fifth wave. While this is an invitation to buy, candlestick pattern bearish, people responded and sold it. Price coming down, price found the support at the low of the fourth wave, forming a double bottom in relation to the fourth wave. You see here, all right? People responded and bought it again. As the price goes above the high of this bullish progression, it formed the same fractal pattern. Okay, green candlestick bar, 1, 2, 3, red, green candlestick bar, 1, 2, 3, red, and then people sold it back down. And now and again, you can see here, we are having a support again in the same zone. So the support of the fourth wave, the support of the fourth wave, the same zone again, we have another, okay, a long tail candlestick bar piercing. Do you remember at dayprotrader.com? If you have a long tail candlestick bar piercing to a key support level, this is okay, a bullish, okay, candlestick pattern. Right? You see this candlestick here with a long tail piercing through this key support level. Trader responded and used a top down trading method, and they bought it this month. And now we have a consolidation here. All right, now to avoid that the video is too long, I would say to traders to put their comment in the comment section if you think that what I've said is not true, blah, 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 blah. Do not be afraid, put in the comment section, that's fine. Personally, I believe that what is happening here, you have to understand that this move. So after 1, 2, 3, 4, 5, an impulsive way, followed by a correction, people believe that there should be a trend, all right? There should be a new cycle. But that new cycle that we were expecting is in fact a correction. Which one? 1, 2, 3. All right? So the cycle has ended here. People were expecting a new cycle, but that cycle is not happening now. But in fact, after the first cycle, we have again a correction. 1, 2, 3. Will you agree? So if you see 1, 2, 3, a price changing direction, it's a corrective wave. So this move 1, 2, 3 is a correction. Though at that point in time, people were expecting a new cycle. That's why I say to you, the wave count is dynamic, and there will be, that's as I explained to traders before, at the end of an earlier wave cycle, it's not guaranteed that a new cycle will begin straight away. Now, before a new cycle will begin, the fundamentals should be solid, and the market participants should believe that, okay, there are more to come, all right? So that's why sometimes you may have a complex correction. As an earlier wave cycle is finished, as a correction is finished, a zigzag pattern is completed, all right? A flat correction is completed, all right? Any pattern is completed, a triangle is completed. People say that, all right, an impulsive wave will begin, but sometimes you may have X, you may have a complex wave because the fundamentals are not supporting, okay, the technical analysis. Though technical traders are expecting a new bullish cycle, fundamentals are not solid, and probably the market environment is not supporting the new cycle, or the sector, in fact, is not supporting the cycle. All right. So after we have identified an earlier wave cycle and we are expecting a new cycle, we must now, all right, check the fundamental, the market sentiment. And for some stock like this, probably they went a little bit too far. Their book value. So smart money, if it goes 5 times the book value, they think it's too expensive and they don't want to push it too far anymore. And blah, blah, blah. Okay? So, personally, I believe that all these things that we see after the 1, 2, 3, 4, 5 wave, all this that we see in this session is a correction. As you can see, it's a correction. This one is a correction in relation to this one. And then we have 1, 2, 3 confirming again a correction. Personally, all these blah, blah, blah in this, all these waves that we count here, all right, it's a flat correction. This is a flat correction. A flat correction that is a bit distorted, as I explained to you why we see this push all the way here. It's a flat correction. Normally, we should have, in a normal orderly flat correction, we should have 1, 2, 3 orderly manner, and then 1, 2, 3 to the 138.2% Fibonacci extension level of the 5th wave. All right? All right? That's what we see. And then we see 1, 2, 3, 4, 5. Now, some trader may say to me, George, this is a running flat correction. The first one here, they will say 1, 2, 3, 1, 2, 3. Here it is, George, 1, 2, 3, 4, 5 down here. This is, okay, this is a running flat correction here, completed. And now, this is another X. At this point in time, maybe yes, at this point in time, they may say, all right, it looks to me that this is a running flat correction at this point in time. Okay, they may say, okay, George, looks like a running flat correction. If they examine the internal wave of all this this one, and this one. If it's 1, 2, 3, 1, 2, 3, and then 1, 2, 3, 4, 5 to this point, let me say this is a running flat correction. Okay, at that point in time, all right, good. All right, so now price start going up. Okay, it didn't go too far. So this move here, what you can do also is to apply Fibonacci extension to this session, and see whether this one has ended at 138.2% Fibonacci extension level of this one. Because the price goes above the high of this price action here. Try to apply Fibonacci extension to this session and see whether you end at 138.2% level. I believe so. It is a 138.2% Fibonacci extension level of this move. Again, failed to go above that critical Fibonacci extension level. So, personally, this move down, so the reason why I keep saying personally, so dissociate myself from other traders, that this is my wave count, I would say first wave, second wave, third wave, fourth wave, fifth wave. All right? Now, because I don't have the chart, I don't know the internal wave of this move down. This move down is it went down too far. Understand why? That's okay. It can be distorted, but personally, normally it should be 1, 2, 3 down. All right? Followed by 1, 2, 3. Now you can see that this 1, 2, 3 is a bit messy because of what I've already said to you, what was going through the mind of traders, what is happening, okay, at that point in time. So now you need to pay attention. Personally, I believe there should be one more move down before the price will start going up, because it looks to me, because I don't have the chart, I'm just looking at this chart here. Okay, so it looks to me 1, 2, 3. All right, 1, 2, 3. All right, now we are expecting 1, 2, 3, 4, 5. So, though this consolidation is happening here, as an alien wave traders, all right, it will be preferable for this stock to come down one more time. That will clear our minds. All right, if you understand what I'm trying to say here, I would prefer it to come down one more time. That's all. All right, so that will form 1, 2, 3. Now the fourth is a triangle here, okay, and then another one down. It may not do that at all. Why? Because sometimes some wave can be hidden. As you can see what is happening here, as we are counting wave, we are going one step at a time. Until the price exposes itself, we just wait and see what's going to happen. So we are expecting something, all right, but we wait. All right, this is the best approach. So we are expecting something, but we wait. If it's happening, we take advantage of it. If it's not happening, well, we are not going to create it. All right, we are not going to create it. So all I will say to you is a flat correction, and I'll explain to you why. Blah 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 blah. All right. The candlestick pattern trader, the Fibonacci trader, price came to 50% and 61.8% level, goes above the high of the fifth wave, stop at 138.2% of that level. Pull it back again, an invitation to sell. People bought it here. The price goes above 138.2% Fibonacci extension level of this one and stop again. So they move 1, 2, 3 is a correction. Now people were expecting a new cycle, but no, that cycle did not happen. But we have in fact a corrective wave 1, 2, 3. So from here all the way up here is a flat correction. Feel free to disagree. Other traders may disagree with me. Personally, to clear my mind, my expectation is that we should have another move down will clear our mind as an alien wave trader. That will make more sense. Right? Then we will see 1, 2, 3, 4, 5 down. Okay? But once again, after if it happen, if what we are expecting has taken place, all right, we are just going one step at a time, because the stock went up for a while. Now the markets was expecting it, people were expecting a new cycle, but it's not happening yet. So personally, personally, all right, I won't be surprised if the correction keep going on, that they bring it back all the way here again one more time around 1.4. Okay, this low here. So I won't be surprised if they push it back all the way here to see whether people will be more happy to buy this stock around the 1.4 level. All right, but technically speaking, this is what I see. It's a flat correction, a gigantic flat correction, a bit complex flat correction, because of what was going through the mind of traders, okay, at each stage as the price was progressing. All right. I hope I have answered your question. Okay, that you will make excellent decision and improve your area wave count. Thank you for asking a very important question, and I will post it at the 24 area wave YouTube channel. One more time, okay. Thank you very much, and speak to you soon. We are the TSTW24 trader answering a specific question asked by a TST trader relating to a stock called Press BHD. The EPIC is, if I'm correct, is PRESBHD, Papa Romeo Echo Sierra Bravo Hotel Delta. I'm on a monthly chart. The lady sent me the daily chart, but I don't want to go to the daily chart. I leave it as it is. Okay. If you have any more questions, do not hesitate to contact me. For trader that have been watching this video, have any comment or suggestion, well, put in the comment section. I read the comment, and in due course, this will help us, to record more videos. Happy trading to you all, and speak to you soon.